it's the beginning. So we're just beginning in this massive cycle where we move to a digital world. I think 75 is the new fair value. Well, we'll move from now to the halving to the 50. Then post-halving, 50 to 75. How fast? I don't know. It doesn't really matter. In the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. You know, that seems fair. So we go from 75 to 150. Somewhere in that 150 range seems, I won't say guaranteed, but seems highly logical for the high point of this cycle. What people forget is, for whatever reason, they're like, no, I should have a diversified portfolio when I'm young. No, you shouldn't. You should have a super concentrated portfolio when you're young, because you already have this big piece of fixed income, which is your future earning. If you're here, if you're listening to this, we've already won. It's inevitable. Name a technology, anyone, name a technology that once it got to critical mass, you put it back in the bottle and it went away.
Today's interview is with founder and CEO of Morgan Creek Capital, Mark Yusko. Morgan Creek Capital has over $1 billion currently under management, and Mark personally has over 30 years of experience in financial markets. Mark was one of the first institutional investors to not only understand but also invest in Bitcoin and crypto in general, and Mark has been through multiple crypto cycles. This means he has a lot of insight about what to expect from Bitcoin and crypto in 2024 and beyond. In this interview, we speak on the best crypto strategy for 2024, what his price predictions are for the next bull run, and why crypto is going to be the best performing asset of the next decade. Before we jump in, this is a brand new channel that we have created to host the best of the best in the crypto space. Today we have Mark Yusko, next we have Michael Saylor. If you want to become a better crypto investor in 2024 and beyond, be sure to hit that subscribe button. But without further ado, let's jump in with Mark Yusko. Mark, thank you so much for joining us. How are you doing today?
No, doing great, and excited to be here for the conversation, and look forward to getting to know you.
Awesome. Fantastic. Let's jump right into it. So it's been about a month since we saw the launch of the Bitcoin ETFs, and I just want to get your initial thoughts over the last month. Were you impressed with the inflows? Were you disappointed, or did it sort of go exactly how you thought it would play out?
Great final part of the question. So I went almost how I expected it to go, except for the last little wrinkle, which was I didn't anticipate Vanguard, UBS, Bank of America, Merrill Lynch basically coming out and saying, no, you, our client, can't put your own money in this approved product. I really thought this was like the last barrier for all the big advisors to gain access. And so that surprised me a little bit. Now, when I think about it, it doesn't surprise me at all, because they got the call from Ms. Warren saying, hey, we don't like the fact that Gary went ahead and approved these. We don't think he should have. He kind of had to. I mean, the courts told him he had to, because he had no reason to deny them. And so from that perspective, I didn't anticipate that. I thought the inflows would be more 10 billion-ish in the first few days, and we only had, more like 3-4. So that surprised me a little bit. On the other side, it played out almost exactly how I thought it would. You had the inflows coming in, which were robust. I mean, BlackRock's up to over 3 billion, Fidelity's at 2 billion. Bitwise and ARK are nipping at their heels at just under $1 billion. So that's all great. But the outflows from GBTC were expected as well. But I think people kind of didn't think about that when they were thinking about, number go up as soon as the demand increases. And the part that I really didn't anticipate, although I did tweet out about this a little bit, there was a little known change that was happening the same day as the approval of the ETFs, which was there was a new line of futures being introduced at CME. And basically what that means is there were going to be a whole bunch more short sellers on the other side. So I think what happened, I don't have any inside baseball, but what I think happened was some of the big dogs accumulated Bitcoin leading up to the launch and, in accounts. And that pushed us from kind of 40K up to that, momentary spike to 47. And then you have the launch and they start selling to themselves, right? So they could secure supply. But then the people shorting the futures jump on and you had the, flash crash down and everybody said, oh, see, it's a total failure. I'm like, what are you talking about? You don't judge a launch in minutes or days. And just for perspective, right? 2 of the 3, the BlackRock and the Fidelity are number 5 and number 8, I think, of the top 10 selling ETFs in the world. That's pretty cool. And together, the newborn 9 did better than the entire class of 2023. So, you can call it whatever you want. And, the fact that we're not at 100K Bitcoin, I don't know why anyone thought we were going to be at 100K Bitcoin overnight. It's a long answer, but I'll give you one last thing. I made a statement leading up that, there's 30 trillion in accounts managed by UBS, Merrill Lynch, Raymond James, Vanguard, et cetera, controlled by, advisors, boomer money. And I said at least 10 basis points of that is going in this year. So that's 30 billion. I actually think 1%, 100 basis points, is going in, and that's 300 billion. And I think I'm right on this. That 300 billion would be more fiat converted into Bitcoin than all of the history of Bitcoin. And I can't prove that, but I think I'm right in that so much of Bitcoin's market cap is not $1 went in and $1 market cap. It was $1 went in that's now worth $100 or $1,000 or $25. And so that 300 billion that I think is coming is going to move price pretty dramatically in the future.
Awesome. Yeah, I thought it was funny seeing everyone talk about it was a failure. And I think everyone, well, not everyone, but maybe people newer to the space was expecting a God candle on the approval. And then you have the 2 Bloomberg analysts on Twitter, James Seyfarth and Eric, and they're talking about every record that they're breaking and how huge they've been. And it's like from every metric, if you actually look at it, besides the price, they were an overwhelming success. And I think it was James Seyfarth, he also put a graph up of what healthy ETF growth looks like. And it starts off very slowly and then it's a big pickup. So I think these things just take time. And 300 billion would undoubtedly move the needle over time. That would be insane.
That would be big. And the other thing to that point, which is really important, if you go back to the GLD ETF, the gold ETF, because at the end of the day, Bitcoin is a commodity today. Now, we can all think someday it'll be a currency or a unit of account or a monetary system. Probably will be all those things. But today, it's a commodity. Gold is interesting. Gold is the only asset up to this point that is both a commodity and a currency. Right? Silver kind of, but gold really is the monetary base. And when the gold ETF, it was delayed, almost 3 years. Well, why? Well, JP Morgan and others like to short gold, and they kept the price down because if the price of gold runs away, it's an indicator of the devaluation of your currency, right? Because if you think about it, gold for 5,000 years, a single ounce has bought a fine person's suit. From Cleopatra's time to a suit of armor to a suit on Savile Row today, a single ounce will get you a fine person's suit. Yet currencies have come and gone, right? The denarius in Rome, gone. The drachma, gone. And, we still got the pound and the yen and the dollar, but From 1776 to 1913, a dollar was worth a dollar. Today, a dollar's worth 3 cents. And so gold in 1913 was 33 bucks. Today, it's 2,000 bucks. But wait a minute, a single ounce still buys a fine person's suit. So what happened? Well, the money got worse. And Bitcoin's the same way, right? We don't price gold in gold. We price gold in dollars or yen or euros. We don't price Bitcoin in Bitcoin. One Bitcoin's one Bitcoin. That doesn't change. What changes is the amount of a currency you need to get it. So if you look in Venezuela, there's never been a bear market in Bitcoin because the Bolivar has gone straight down, or in Turkey or in Argentina. And so if gold was allowed to fluctuate relative to the dollar freely, it'd probably be $4,000 or $5,000. But they spoofed the price of gold through the futures market. Well, what does that mean? Well, in the old days, if I wanted to sell you a commodity, I actually had to have the commodity to sell to you. And I had to deliver it to you, and you had to take delivery, and we had a transaction. Well, then they created futures contracts, which said, well, I don't actually have to have gold or oil or grain. I can just sell you a promise to go get some. And as long as we settle up the contract before I have to deliver, I don't even have to have any. So people can create out of thin air fake commodities. That seems like a bad plan. Well, it also means if I can create it on the long side, I can go short it naked, which is supposed to be against the law, but I can do that in the futures market. So gold prices went through a very long period after the GLD was approved, 9 months, went down 40%, bounced around the bottom for 9 months, and then went up 10 times. Because ultimately the demand overwhelms the manipulation that's happening in the futures market. And I think the same thing's happening here. And you're seeing it even today, right? I mean, with the little wick up from 43 to 44, you go, well, what's that? The demand is relentless, and the naked short selling is equally relentless, and that's going to be a tug of war for a while. Some days one's going to win, some days another's going to win. But over time, as that 300 billion comes in, prices got to go up because the demand, the supply is going to stay relatively limited.
So forgive me if this is wrong, but wasn't it in 2021 when they launched the futures that marked the exact top? And is that correct?
And in 2018. Oh no, Jamie, this is an important point. So on December 17th, 2018, so, the price had gone to 10,000 for the first time, and it wicked over 6-7 weeks to 20,000 on December 17th. December 18th was the day of the first futures contract. And it was small. It wasn't even a very big one. And I actually tweeted out that morning saying, this is going to be bad. And now I didn't know it was going to go down all the way eventually by the middle of 18 to 3,000. I said it was going to fall probably back to 10, where because at the time fair value was closer to 6 to 8,000. So long story short, it was literally the day of the peak, and we went down up for a year until early 19, and then we started back up. By December 16th, 18 was the very bottom at 3,200. Then in 21, to your point, November 6th, 21 was the day of the peak again, but this was the big futures contract. This one let everybody and their sister go short Bitcoin and push that price. And the problem is we were already 100% above fair value. Now, what I keep talking about fair value. What is fair value? Well, fair value comes from a Metcalfe's law model. We can model any network based on Metcalfe's law. We can determine the fair value based on the number of participants and the number of connections and the nodes in the network. And Tim Peterson has done a lot of great work on this. And long story short, if the fair value was 10,000 bucks, and we go to 20,000, we're eventually going to fall all the way back to 10 and usually fall through, and you get really undervalued. Then the investors come back and they buy the asset. And so if you remember back when GBTC was launched, so GBTC was launched and we were about $10,000, and suddenly we had this wick all the way up over, the holidays of 2020. 2020, holidays 2020, up through 60,000. In January of 21, we hit 60,000. And then Elon did his famous tweet, we're not going to take it anymore. And it went down 50%. And we went from 60 to 30, and it wasn't overnight, but, over 3 months. And people by summer were like, oh my God, it's over. It's going to zero. Yeah. And then people started buying GBTC, and Michael Saylor started buying it. And boom, we went all the way to the 69 on that November 6th date. The problem was fair value at that time was only around 30. So here we are at 70 or 69 or 67, I guess. And fair value is 30. So we definitely had to fall. But now you've got the short sellers in the futures market pushing the price down, and we went all the way down. Then we stabilized in June, and then Terra, I would say it's kind of ironic that Luna went to Terra, right? I mean, the moon fell to the earth. And so that was the start, and then Three Arrows, and then, BlockFi and Celsius and Voyager. But then the big killer beast was, Sam Bankman-Fried, and everything got wiped out, and we made that low at kind of the high 15,000s. And again, people were like, oh my God, we're going to zero. And like, the more people say we're going to zero, that's got to be the bottom. And of course, it was the bottom. And then we just marched incessantly up, to the launch of kind of where we are today. So, I think people are missing is the halving coming up in a couple months, and that's going to double the fair value. So fair value today is somewhere low 50s. We'll just call it 50 to round numbers. The halving doubles fair value. Well, why is that? Well, you think about it. If the block rewards get cut in half of the miners would suddenly go out of business because their costs are fixed. So the price actually has to rise. Well, it doesn't have to rise, but it does rise because buyers and sellers are going to equilibrate, and no one's going to sell unless they get a better price because they got to cover their costs. So there's a supply-demand change, and because the supply shrinks and the price goes up. So that's interesting. So that says that the fair value would be 100. Well, by summer this year, we'll enter what's called crypto fall. So we're in crypto summer right now. Crypto fall is where we get the parabolic craziness. And it's likely that, through year end this year, we'll have some craziness. I don't know how high we go, but we'll probably go really high. And then, we'll have another bear market, and we'll enter crypto winter, in 25. But anyway, that's kind of what I see happening.
So just taking from that, does that mean you are a subscriber to the 4-year Bitcoin halving cycle driving price?
100%.
100%? Because I got to speak with Raul from Real Vision, and he's of the impression that it's all the Bitcoin halving just coincidentally lines up with the debt repayment cycle, and it's a 4-year debt cycle, and it's all liquidity driven instead. You think it is the halving and the cutting of supply, and that drives all price?
Yeah, look, I mean, I don't disagree with the liquidity issue or liquidity point. And Raul and I are friends. I mean, we known each other a long time, like each other, collaborate on stuff. But one of the things they say is if two people always have the same opinion, one is unnecessary. And I always say I like to be necessary. So I don't always agree with anybody. But my point is, yes, liquidity drives markets. Forever and always, liquidity drives markets. But the point that's missing there is it's not that Bitcoin is a risk asset like, tech stocks or, or venture capital, and that's being driven by liquidity. I think it's the exact opposite. It's the creation of money, okay, which is the unit in which we denominate Bitcoin, is what drives the price. So if the money supply stayed the same, the dollars per Bitcoin would stay the same. And the only thing that would move the price of Bitcoin would be the demand for Bitcoins, the actual tokens, relative to their supply. But that would be, ceteris paribus, all things equal, but all things are not equal. Sometimes the money supply is expanding, sometimes it's shrinking. And yes, Raul's right, there is this liquidity cycle and debt repayments and all that good stuff. But here's the thing. The money supply over the last 12 months has contracted actually for the first time in 100 years in the United States. And yet the price of Bitcoin almost doubled. Well, how can that be? Well, it's because the uncoupling of those cycles, in the sense that if you go back to 2020, when the world lost their minds and passed the dumbest set of rules in the history, literally, of mankind, and that's hyperbole, but I believe every word of it. We took the seasonal flu, we weaponized it, and we ran a control experiment on the world to see how much shit people would actually take, right? And because of that, they convinced, there's this group in DC called the Cult of Kelton, Stephanie Kelton, convinced the politicians that they could issue as much debt and as much money as they wanted with no consequences because we have the world reserve currency. That's one of the dumbest ideas in the history of economics. And economics is replete with dumb ideas. I mean, there were lots of dumb ideas. That's the dumbest of all of them. And so we've been a republic for 247 years and 248 years. And for the first 244, we issued $10 trillion. Then we issued $10 trillion in 2 years. That was a bad plan. And so if you think about it, if we doubled the money supply, what should have happened to the price of gold and Bitcoin? They should have doubled. Curiously, if you go back right before the pandemic, Bitcoin is around 15,000. And before the shenanigans with Sam, it was at 30,000. That's really interesting. And that's just Bitcoin denominated in dollars. And the same thing happened at my house here in Chapel Hill. According to Zillow, my house went up by 50%. No, it didn't. My house did not grow. My house did not get more efficient. I actually had to put money into it because we were wearing out, but that's not the point. What happened is the money got worse. The money went down. The money was devalued. And so what happened was Bitcoin got pushed below its fair value, its fair exchange value of 30,000 down all the way to 15,000. Why? Because people were afraid of the liquidation of FTX and all the scandal and was Tether a fraud and all this FUD. And so you had a temporary dislocation. And so, yes, money supply was contracting, and yet Bitcoin prices went all the way back to 30,000 and then higher to 40,000. Not because they are inextricably linked to the money supply at the moment, and not because it's inextricably linked to the what's happening in the government. I believe it's because of the 4-year cycle. And the 4-year cycle is tech, like code, right? It's hard-coded into Bitcoin that every 4 years you decrease the supply by half. That's a really interesting idea. Why would you do that? Well, it's interesting. My theory, and this is my theory, is you do that because it's guaranteeing movement. And if you have a nascent asset, what you need is something to attract attention. And movement in price would attract attention. So if you think about the 4-year cycle, when the price is below fair value, in the middle of crypto winter, right, where everyone is sold, price goes below fair value, investors, right? People like me and others who our job is to buy things below fair value. That's what an investor does. So they start to buy and the price stops going down and starts to go up. So then as the price starts to get close to fair value, the traders come in. The traders don't really care about fair value. They just want to scalp. They need movement. They need things to be stable and moving. They may go long, they may go short. They don't really care. As the price starts to get back above fair value, so you go from crypto winter to crypto spring, then into crypto summer. And in crypto summer, you start to get more movement slowly back towards fair value. And once you get to fair value and you enter crypto fall, where we are today, the speculators start to come out. And the speculators start to come out because the price starts to move more. Then the halving occurs. Well, the halving makes the price start to rise. As I said, the miners aren't going to sell unless someone offers them a bigger price because they can't cover their costs. So they hold longer until people bid more. And so the price starts to move. And this is not politically correct and sexist and all that good stuff, but it's real. Like men, okay, we have the hunter gene from cavemen days or cave women days, and the women are the gatherers. Right? And that's the way it was. It's not male thing. It just is what it was. So that person that walked by my office a minute ago, I watched them, right? I follow those movements. I always say, if it ain't moving, I can't see it. And people hate when I tell the story, but it's true. My wife says, get the ketchup. I open the refrigerator door. I say, honey, there's no ketchup. She walks up. She grabs the ketchup. It's right there. If it ain't moving, I can't see it, right? And so once the price moves, then the guys start to come in. And most crypto traders, this isn't a value judgment, it's just a fact, are guys. They happen to mostly be younger guys. And they tend to be a little more overconfident and a little more over trading. And those speculators come in. But then the problem is the gamblers come in. And these are all walks of life, males, females, older, younger. And these are the people that look at the price moving and they're like, oh, this is easy money. And they borrow money to play it. And that's what gives us the parabolic blow off. And then eventually somebody says, nope, that's too high. And they short it. And we start the cycle all over again. And, we had the futures facilitate that twice. And it'll probably be, something else next year.
Awesome. And no worries about not being politically correct. We are not politically correct on this channel. So I love it. Now, you mentioned before that you have a fair value Bitcoin model and it's at, say, around 50,000 rounding. And after the halving, it goes to 100,000. Once all these speculators and gamblers come in, do you think we go to fair value and then they send it even higher? Are you do you subscribe to the diminishing returns that we're going to see lower and lower in terms of percentages returns on Bitcoin over cycles? Or what's your forecast over, say, 2024, 2025, the bull run?
No, it's such an important question, and means you've done your homework and you follow this, and because it's really insightful to understand the nuance of multiple things. One, the law of large numbers says that it's harder to go up a lot on a big number than it is on a small number. That's why I tweet out hashtag chart crime all the time, because people show all these hockey stick charts over long periods of time. You can't show a long-term chart without log scale, because going from 10 to 20 is different than going from 20 to 30 or 30 to 40. You have to use log scale. And then they don't look so parabolic. They still can go up, but they don't make these hockey sticks. And so this idea that we're going to have the 40x move like we did when it went from $1 to $40, well, it's a hell of a lot harder to go up 40x when you're $100 or $1,000 than it is when you're $1. So that's the first thing. The second thing is leverage is what really drives the parabolic blow-off number. So whatever that number is, right? When you're under fair value, normal investors are buying, because that's what investors do. They accumulate assets below fair value. They don't like to buy above fair value, but they will. And then a speculator is actually just the opposite of a hedger, right? It's actually a term of art. So if I'm an oil producer, I have to sell my production forward in the futures market. So I'm a hedger. I need a speculator to come in and take the long side of that sale. Same thing with, I'm a Bitcoin miner. I need to hedge my production. I need a speculator to come and buy. So that's not good or bad, but that speculator is providing capital, net new capital that moves the demand. But then the gamblers come in, and the gamblers borrow money to increase the amount of demand even more. And that's where you start to get this parabola. So two things I think happen this cycle. One is, I believe the halving cycle, the doubling of fair value, is contingent on the fact that block rewards are cut in half. Therefore, miners would be in trouble if the price didn't move. But what about ordinals? Now we have ordinals and we have transaction fees. So let's say, and again, I'm going to make these numbers up. Let's say that impact is 50%, meaning we're going to have 50% less upside from the reduction of block rewards because the miners can make up some ground through transaction fees. So let's say we go to 75 instead of 100. That's actually where I think we're going to go. Call it 75 to 80. Just to be conservative, we'll keep it 75 because of transaction fees. Now, I guess if Luke Dasher gets his way and we fork off and we have no more ordinals and no more transaction fees, then we're back to 100. But I don't think that's going to happen. But I like him, but I don't think that's going to happen. So I like ordinals, and I own some assets on ordinals, so I like on-chain monkeys. But I think 75 is the new fair value. Well, we'll move from now to the halving to the 50. Then post-halving, 50 to 75. How fast? I don't know. It doesn't really matter. So then we get 75. Well, now the traders and the speculators and eventually the gamblers. Well, this cycle, I think there's less leverage, right? They clamp down on Binance and they clamp down on Voyager and Celsius. And so there's just less leverage. So let's say in the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. That seems fair. So we go from 75 to 150. Now, that 150 has some volatility to it. You can't predict a point. So if there's more speculation, we get a little higher than 150. If there's less speculation, you get a little less. But somewhere in that 150 range seems, I won't say guaranteed, but seems highly logical for the high point of this cycle. Does it have to be 150? Could it be 180? Sure. Could it be 120? I don't know. I've seen a lot of smart people predicting anywhere from 100K to 120K, 104K, Tommy Mustache, Tim Peterson's at 104K. No, somebody else was at 120. Now, Max is out there. Oh, it's going to be 250. There's going to be a God candle. I love Max. I love Stacy, but I don't see that. I think there's not enough leverage to get us there. So, I'm a 150 guy.
And then on the back end, do you think we see these 4-year cycles just essentially forever into the future? We see the speculators and gamblers come in, they push it up, and then we see this fall back to fair value. And if you do subscribe to that, do you think it's important to have an exit strategy? And when we get this FOMO and everyone's talking about it, people should be taking chips off the table? Or are you more of that's a fool's game, you should be dollar cost averaging, just hold it? It's the easier, more stress-free option that everyone should approach.
It depends. No, so again, great question. Love the question. So I ascribe to the simple fact that I believe Bitcoin, little b Bitcoin, not big B Bitcoin, the token, but little b Bitcoin, the network, is the most powerful computing network the world has ever known, right? It's 1,400 times more powerful than the CERN supercomputer. Unbelievable. Which, by the way, someone showed me the logo for CERN, and it's a 666, blew me away. If you actually look at the CERN logo, it's got 666. Same with the Google thing. I mean, it blew me away. But just a fun fact. But the Bitcoin network is 1,400 times more powerful than the CERN supercomputer. It's also the most important computing network in the history of the world because it's setting the new base layer for money. Gold has been the base layer of money for 5,000 years. Bitcoin will be the base layer of money for the next 5,000 or 10,000 or whatever. So my view is the price is irrelevant. Price is a liar. Like literally, price is a liar. Price has nothing to do with value. Price is what two people exchange a small amount of any good or service. That's the price. Like the price of Microsoft stock. It is what it is if you have 100 shares. If you have 1 million shares, that is not the price. If you have 10 million shares, that is not the price. You got to go negotiate with somebody to buy your block. So price doesn't matter. What matters to me is owning a piece of the most valuable computing network in the history of mankind. That just seems like a good thing to own. Now, you don't have to own with all of your net worth, but everyone should own some. So my whole thing is hashtag get it off zero. Zero ownership of the most valuable computing network in the history of mankind seems like a bad trade. So own some. And so I was on CNBC, I don't know, 2017, 18, it doesn't really matter when it was. And the price literally, while I was only on for 6 minutes, but like while I was on the show, the price went from like 10 grand to 8 grand. And at the end of the segment, Melissa Lee says, so, price just collapsed. What should we do? Right, buy it. Just, what? Oh, you'd always say that. You'd always say buy it. I'm like, yeah, I would. Buy it today. Buy it tomorrow. Buy it next week. Buy it next month. Don't buy it all at once. Buy some today. I mean, let's say you want 1% or 2% or 5% or 10%. It doesn't matter. Pick a number. Buy 1/10 of it today, 1/10 of it next month, 1/10 of it. Just keep accumulating. That ownership is really important. Now, if you also want to have a piece of trading capital, right? I'm not a trader. I don't really do this because I stink at it. I'm an investment guy. Fine. You want to buy the parabolas and sell the top? Go for it. Just make sure you buy more at the bottom if you want to trade. But as far as the ownership piece, right? The piece that should be in everyone's portfolio, it had 1, 2, 3, 5, I don't care, whatever percentage. Just keep buying that and accumulating that no matter what the price, and just forget about it. It's just every 2 weeks, most people who have a retirement account, a 401k, are buying stock every 2 weeks. They don't even know it. They don't even think about it. It's just happening. So do the same thing with this. And I don't understand the difference, right? It's a better long-term asset because what it does is not only provide you with a means of growing your wealth, but it's also a hedge against the destruction of the currency we all live and work with, right? I mean, whether we like it or not, and I don't like it at all, and I talk about it all the time, since 1913, the United States of America has decided that they're going to steal 2% of my wealth every year. Sometimes more, sometimes less, but on average, 2% every year through inflation. No, inflation is good for me. No, it's not. On what planet is over 30 years taking half your purchasing power good for you? There's no planet on which that is a good thing. And if you think about any country with higher than 2% inflation, tell the people of Argentina at 118% last month that somehow that's good for them. Or tell the people in Turkey who just lost 99% of their purchasing power that somehow the lira depreciating is good for them. Or tell the people in Venezuela that the bolivar is being worthless. I mean, I have a picture out in the hall that's made of bolivars. Like literally, they used it as the background of the painting. And I had this cool app that you put it up and it flames and you got a Bitcoin behind it. So it's pretty cool. But anyway, that's the answer, which is as one of your core holdings, doesn't have to be your only one, but as one of your core holdings, you should accumulate over time. Yeah, you should. And especially for young people, what people forget is, for whatever reason, they're like, no, I should have a diversified portfolio when I'm young. No, you shouldn't. You should have a super concentrated portfolio when you're young, because you already have this big piece of fixed income, which is your future earnings that's going to come in the future. And so what you should have in the short run is private equity, venture capital, real estate, stocks, all the high volatility assets that you can own when you're young. And Bitcoin is certainly one of those. And in fact, Bitcoin as a part of a diversified equity portfolio, it's the greatest addition because it's uncorrelated with your other equities. Because all your other equities are driven by economic growth, interest rates, and inflation. Bitcoin's not driven by any of that. It's driven by money supply, technology, and adoption. And the last thing I'll leave you with on that is, my generation, us boomers, we're going to leave $37 trillion to y'all's generation, the echo boomers or the millennials. That $37 trillion is not going to stay at UBS and Merrill Lynch and Vanguard. It's just not. I mean, I say this all the time. I have 3 grandkids, and my 1-year-old granddaughter, she will never have one of these. She will never have a leather wallet. She will never know what paper money is. She will only use digital assets in her lifetime. Think about that. She'll never drive a car. She'll never have a wallet. She'll have a digital wallet, but she won't carry around a plastic card. I mean, imagine how silly it will seem 10, 15, 20 years out that you would get out of your car and plug the plastic card into a machine. The car will just pay the machine and it will drive away. I mean, you're on the freeway and you want to go in the fast lane. You won't have to take a picture of your license plate and get a thing in the mail for $4. The car will pay the will pay the fee. It's just, there's a whole world of decentralization that's coming. And the aha moment for me, and the reason I do this, and look, I'm an old guy doing a young man's game, or a young woman's game, and I'm doing it because I had the aha moment, right? When I realized that blockchains were simply the operating system for the next generation of computing, right? The same way that mainframes ran on COBOL, still do today. No one can code in COBOL, but they still run on COBOL. In fact, MasterCard and Visa run on COBOL machines, which is ridiculous, right? But they do. And, PCs run on Windows and DOS, and, the internet runs on TCP/IP, and these things run on iOS and Android. And the internet of value, or the internet of everything, will run on blockchains. Once I had that epiphany, I couldn't unsee it. And once I realized that Bitcoin was the manifestation, the first use case of a blockchain, and it was digital money, again, I can't unsee that. And it doesn't mean there won't be other L1s. There might be. It doesn't mean there won't be other L2s and L3s. There probably will be. It doesn't mean there won't be other applications of blockchains. There will be. But we're at the very beginning. This is the fun part, right? Everybody says, it's over. Are you joking? 2024 is the first year of the digital age. I mean, I've been talking about this forever. 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024 with the truth net, as I call it. And it's the beginning. So we're just beginning in this massive cycle where we move to a digital world. And we won't have physical pieces of paper. We won't exchange green pieces of paper or yellow piece of paper or red pieces of paper. Ridiculous. We won't carry around stuff in our wallet or our purse. We won't actually keep stock certificates in file drawers in Dallas, Texas. Ridiculous. We'll have digital ownership, and every asset in the world will be a token, not a little round circle of gold, a line item on a ledger, permanent, immutable, and secured by encryption and cryptography. And that process liberates, and I use that term intentionally, $7 trillion that's wasted every year. Now, I say it's wasted. The banks, the brokers, the accountants, the auditors would say, well, that's our revenue you're calling waste. Like, yep, it is. And yeah, some of them will die, and they don't want to die. So they're going to fight hard, and, we're going to have to overcome. But it's like the old Mandela quote, from down on your side of the world, that, first they ignore you, 09 to 15, bunch of nerds and geeks, go play with their magic internet money. Yeah, whatever. Then they laugh at you, 16 to 21. Bunch of nerds and geeks, magic internet money. So, who cares? Then they fight you, 22 to 27. Now they're going to fight us. Okay. But the cool thing is we all know the last part of the line. Then you win. So if you're here, if you're listening to this, we've already won. It's inevitable. Name a technology. Anyone. Name a technology that once it got to critical mass, you put it back in the bottle and it went away. Air travel, biotechnology. Yeah, I love the one when the horseless carriage came out in New York. The street sweepers, the guys who swept up the horse poop. In fact, most people don't know this, but if you go downtown New York, the stoops, the front doors of houses are 9 feet above the street. Like, why is that? You can't get in. Well, in the olden days, the horse poop would stack up 4 or 5 feet, and they built sidewalks 9 feet high so you could walk into your house. And the dresses wouldn't drag. Now, the problem is you got drunk and you fell. It was bad, but okay. But those street sweepers wanted to keep their jobs. So when the horseless carriage came along, they lobbied, fancy word for corruption, the legislature to pass a law called the red flag law. We've all heard the term red flag. And the red flag law basically said you had to hire a human to walk in front of your car with a red flag, warning everyone that you were coming. Anyone ever seen, and it would be really hard to do at 55 miles an hour, but no, you never seen anybody walking with a red flag because it was a stupid law. And inevitably, street sweepers don't exist anymore. So yes, we had to displace their jobs and we had to retrain them, but I love this part. Everybody says, no, every technology is evil because it erases jobs. Yes, it does. But here's a fact. We've eliminated millions and millions and millions of jobs with air travel, biotechnology, the internet, the mobile net, blockchains. Yet, today, we have more jobs in the world than any time in human history. And that's just the way it works. Human creativity is the greatest force known to mankind. And one of the cool things, if you ever listen to Jimmy's song, what Bitcoin does is it frees you from fiat slavery. And I know it's a politically charged word, but it frees you from from fiat slavery. And it allows you to unleash your creative potential because your money is not being stolen every day. Your money is accreting every day. And that is a mindset that it's hard for people to kind of get used to because they've only known a world where their money gets stolen every day. Anyway.
That was incredible. I love that answer. That was fantastic. And I do want to highlight a really important point that I don't think is spoke about enough, but I have seen you mention it a few times, and I think it's important, is the massive tailwind that crypto has and Web3 in general that, and it's a little bit morbid, but over the next 2-3 decades, the amount of wealth that is going to get passed from boomers down to millennials and Gen Z. And an example I have, which is insane, is of all the people in my life who know I do crypto and I spend a lot of time in the space, the people that ask me the most is my 10-year-old and my 14-year-old cousin. They ask me about Bitcoin and crypto. And it's like, when I was 10 or 14, I didn't care at all about investing. It blows my mind. So as these younger generations get hold of this wealth, it's definitely not going into bonds. A much bigger allocation is going into Bitcoin, crypto, and just Web3 in general. So I think that's a really important point you highlighted.
Oh, no, look, I talk about this all the time. It's called the digital divide. Ask anyone over 35, who's your broker? I don't know, Merrill Lynch, UBS, what? How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, my God, 0. Ponzi? I mean, that Peter Schiff guy, no. How often do you use DeFi? What's DeFi? Okay, ask anyone under 35, who's your broker? What's a broker? I mean, I got a Robinhood account. You mean that? How much gold do you have? Oh, my God. Boomer rocks? 0. Haven't you heard that Peter Schiff guy? No. How much Bitcoin do you have? I don't want to talk about it. Why not? Well, it's a big piece of my net worth. I'm kind of embarrassed. How often do you use DeFi? Every day. So it's 100% true that the Zoomer generation, millennials, Gen Zs, and the Zoomers, the Gen As, they're just going to live in a different world. And it's not that the boomers are bad. It's just we only know the fiat world. And we only know the fiat world untethered from the gold standard, which is where most of the damage occurred, right? From 1971 to today, that's when, the real damage occurred, and the wealth gap is now the widest it's ever been. So all the wealth's at the tippy top. I would say it's, in the all-seeing eye. And, that it's not morbid, it's just fact, right? We're all going to die. Every single one of us, every single person. And, maybe, with who's the VC who's trying to biohack himself.
Brian Johnson, that guy.
Yeah, that guy. Although I did get a kick that, he's spending $2 million a year and he's in 7th place. And the guy who's in 6th place is only spending $30,000 a year. He's 62 and Brian's like 45, and the 62-year-old, I mean, he looks as young as you. I mean, it's incredible.
Okay, wow.
So, it's unbelievable. But so maybe they'll figure out how to live forever, but probably not. So humans are going to human. And at the end of the day, I don't fault people for living in the world that they understand, and I don't fault them for being skeptical of new ideas. Look, I joke all the time. It's sad, but not sad. I mean, I don't really care. But I was introduced to Bitcoin the same month as the Winklevoss twins. They're multi-billionaires and I'm not. Why? Because they got it faster, right? They were younger. They were hanging out with Charlie in Ibiza. I was hanging out with my clients who were telling me I was an idiot and they would fire me. And so I was afraid, right? I was going to lose my clients over this crazy new thing I heard about. But 3-4 years later, I'd done enough work that, I could go, not all in, but I could make, a big change. And no one's crying for me. I'm not asking for sympathy, but it's just one of those things where being skeptical is fine, but not doing the work is not fine. And once you do the work, you can't not be excited. Once you understand what a blockchain is, once you understand how Bitcoin works, once you understand what proof of work is, you can't go back to seeing the fiat world the same way. And do I think fiat's going to end tomorrow? Hell no. Governments are going to fight tooth and nail. They're going to try CBDCs, right? Pure evil. But, and look, I get in arguments with maxis all the time about this. They're like, oh, you're a shitcoiner because you own all this other stuff. I'm like, look, I'm a technology maximalist. Yes, I own Bitcoin. I own some Ethereum. I even own some Solana, a few other things. I'm a technology maximalist. And no, I don't have 100% of my net worth in Bitcoin. And neither do you. They're like, what do you mean? Like, do you have a bank account? Well, that's not the same thing. I'm like, do you have a bank account? I'm like, well, it's not the same thing. Like, do you have a bank account? And they're like, well, yeah. I'm like, okay, then you don't have all your money in Bitcoin and you're not totally off the grid. And so most of us don't want to go all the way. right? We don't want to live in a place where, we're totally out of harm's way and totally self-sovereign yet. Now, maybe the totalitarian states will push us to that point, but not yet. It's still, Australia's a pretty nice place to live. America's a pretty nice place to live. Europe's a pretty nice place to live. And, I can do most of what I want to in fiat. Does that mean I don't have an increasing amount of my wealth in digital assets? No, it means I do. But do I have 100? No. And not going to be at 100 anytime soon. So the key is that migration from the old world to the new world. Think about it in terms of the actual old world, new world. In 1492, there was no new world. There was no North America. There was no South America. I mean, they existed, but they weren't what they are today. And these crazy guys got on ships, made of wood, with water that spoiled in 4 days and not enough food to get across the ocean, and they went across the ocean. And over the course, not of 4 months or 4 years, but, more like 400 years, there was eventually the new world. So it took a while. And in that time, we went from Portugal having the world reserve currency to Spain having the world reserve currency to the Netherlands having the world reserve currency to France having the world reserve currency to UK having the world reserve currency to today, the US. So it hasn't always been US dominated world. But in that, 500-year span, we saw all kinds of change. And, think about it. We don't all have a bunch of, gold in our wall safe. Some people do, but most people don't. Most people still use the banking system, even though they complain about it because it's convenient. I like using my Visa card, even though I think it's a silly system running on COBOL. But the fact that I only have to settle up once a month, pretty convenient. So there are things that work in the traditional world that don't need to die tomorrow. Do I believe decentralized is better? Sure. Do I believe every asset in the world should settle to a blockchain? Absolutely. But not tomorrow. And, I always like to bring everything back to my favorite movie, Maverick. It's like when, General Kane says, Maverick, your kind's extinct. Your kind's heading for extinction, Maverick. Like, maybe so, sir, but not today. So, yes, the old world is going to be extinct, but not today. And it'll take time. It'll take leadership. And that's why people who watch your show and others and who are educating themselves and your 10-year-old and 14-year-old nieces and cousins, that's who's going to make the future. My 13-year-old son, right? Who very different than my 34 and 32-year-old kids. I mean, just lives a different lifestyle, more connected, more, technologically savvy, although my son works in tech. But anyway, that's a long riff on this idea of change, incremental change, but directionally knowing where we're headed. Just like those people that left Portugal and Spain in 1490s, they knew where they were going. They didn't know how long it was going to take, and they weren't sure they were actually going to get there, but they knew generally the direction, and the world's a better place because of them.
Love it. I love that answer. And I do want to be mindful of your time, but there's just one more question I want to get to. You mentioned you're not a Bitcoin maxi. You own a bunch of different things. You're a technology maximalist. Now, we had BlackRock and we have a bunch of Ethereum ETFs. We have the final deadline coming up in May. 2 questions around Ethereum. Do you think we get approval in May? Does BlackRock applying for giving an application to the SEC, does that make it a certainty in your eyes? And secondly, do you ever think we see a flippening? Do you ever think Ethereum takes that number 1 spot, or is Bitcoin forever cemented as the number 1 top dog?
Yeah. So again, 2 really good questions. So I would have said, past tense, that BlackRock submitting meant guarantee, right? They're, 477 out of 478, right? They don't lose. So that's that makes me change my stance from 2 weeks ago, where I was like, look, Gary isn't going to approve it no matter what, because the only reason he approved the Bitcoin was because the court literally forced him to. Right? They basically put him in a situation where it was untenable for him to not approve. So I also think Ethereum has some very strong allies in the traditional world. And, the whole consensus crowd is very tied into, the whole BlackRock crowd. So I would say that increases the likelihood. I'm still not going to say it's much better than a 50-50, but it's not a zero like I thought it was a couple weeks ago. On the flippening, I don't think so. And here's why. So they're different use cases and different market opportunities. So, the TAM, the total addressable market, is very different. So if we break them into, Bitcoin is a true peer-to-peer electronic currency, right? Digital currency. It allows you and I to exchange value directly with no intermediary. And it's a great store of value, and it's essentially digital gold. So if it replaces gold, as I believe it will, for most of the base layer of money, that's a $5-6 trillion market cap, and that it begins the assault on all money, all fiat. And Murray Stahl will make the case that that's inevitably going to happen. He has this great theory on the reverse Gresham's law. Normally, bad money crowds out good, and you see that in every third world country in the world. But he says that was because we didn't have perfect money. Now that we have perfect money, Bitcoin, it will eventually crowd out all bad money. And I think he's probably right on a long enough time horizon, but in a long enough time horizon, we're all dead. So I'm not sure I'll see that. But I do think that the likelihood of Ethereum, which is more of a global compute, I don't think it has a case to be money. So I don't think it's ever going to get a big share of that digital gold market. Like some central banks have some silver and some platinum in addition to gold, but not much to care about. So people who say Ethereum's like silver, maybe, but not really. So I think Ethereum exists more as a building block network on which other things will be built, and then how it generates revenues and fees. Gas fees are super high. There was a great quote before yesterday's outage that if Ethereum was created today, would anyone use it over Solana? And you think about that, as I say, good question. And based on functionality and speed and price, say no. But if you said, well, but I like my networks to be up and not to be able to be turned off, and I'd probably use Ethereum over Solana. So I don't think there's been an Ethereum killer that's actually worked. EOS was going to be that. Well, that was a disaster. And, Solana was going to be that. Avalanche was going to be that. There have been a lot of Ethereum killers that never killed it. So I think Ethereum has a role. For me, it comes down to, I can't answer. I said I have three mental models. One is Web 2 to Web 3. So Web 1 and Web 2 are based on 5 protocols: TCP/IP at the base, FTP for files, SMTP for email, HTTPS for websites, and www that ties it all together. So in that model, Bitcoin clearly the base layer, Filecoin arguably like FTP, Ethereum arguably like www. Who's SMTP, HTTPS, Cosmos, Polygon, Avalanche, Solana? Not really. It doesn't mesh perfectly. So maybe that's not right. The Lord of the Rings, one chain to rule all chains, only Bitcoin, Lightning, no. L3, L4, maybe. I mean, I can make an argument that every asset of high value in the world will eventually settle onto Bitcoin. That makes perfect sense to me, because why wouldn't I want to be on the most secure, safest, most powerful chain? Clearly I would. If I owned the Mona Lisa, I would want it on chain on Bitcoin. So then there's the third world, the third mental model of a bunch of L1s, Ethereum, Solana, etc. And these bridges, they don't work. Right? The bridges have too much attack surface and too many vulnerabilities. So until you get Chainlink is like, no, we're great. Okay, great-ish, maybe. Algorand, we're great-ish. So until you get chains that are not vulnerable, I don't know that you can have the grid. So again, I'm not like a techie, like I'm not a coder, I'm a financial services guy. So that's how I think about the world. And in that world, Bitcoin is king. Ethereum is the crown prince. And then there's all the other princes that hate each other. And most of those go away, right? They literally do. I mean, most utility tokens have no utility, so they should die and will die. It's like pre-seed venture. 96, 97% die. The ones that don't die, you make a lot of money. A lot. Meme coins, I have no time for them. People want to punt around in them, great. But it's a Ponzi scheme. And no, it's a Ponzi scheme. But if you don't get out before the others and you're left holding the bag, you lose. So, but as long as you got celebrities telling people to buy stuff, number will go up. But think about why. I mean, where's the utility in Dogecoin? Oh, but Elon's going to make it a payment. Fine. When he does that, if he does that, talk to me. But until then, it's a Ponzi scheme. And that's fine. Plenty of small cap stock Ponzi schemes. I mean, I remember there was one, these guys called me up. It was a stock called Cobalt Blockchain. I'm like, all right, tell me about it. Oh, well, we're gonna secure the provenance of cobalt using blockchain. I'm like, yeah, it's actually not a bad idea. No, if it's from a conflict zone, fine. How much cobalt do you have? Oh, we don't have any. I'm like, well, what are you doing? Well, we're gonna do a reverse merger into this gold mining company, then we're gonna do GRC. I'm like, shot. You looked at the two highest search terms on Google, cobalt and blockchain, and you made up a company to fleece people. And they raised like $6 million and it went to zero. So that's existed since the dawn of time. And so plenty of those are shitcoins. There are plenty of those. Solana's not a shitcoin. Now, you may not like it. Polygon's not a shitcoin. I mean, you may not like it if you're a maxi, but they're not Ponzi's, right? They're trying to build tech, right? Cardano's trying to build tech. XRP theoretically is trying to build tech. I don't know about that one. But there's a huge difference between that and, names I won't even say on air, right? That are just trying to get people to buy them and so someone else can get out. Fine. But that exists in stock markets. It exists in bond markets. It exists all over the world in collectibles markets. I mean, there are plenty of people who bought Beanie Babies thinking they were going to go up and they were going to sell them, right? I own a bunch of Pokemon cards that my son always tells me, oh, Dad, this one's worth it. I'm like, it's only worth it if I can actually find someone to buy it. But, he and I have fun playing Pokemon and, that's worth something.